I appreciate everyone being here today. It's nice to speak with you all, and thanks for all the knowledge sharing. So housing prices across Canada, I said North America, but then I'm going to get specific to Canada and the United States. But housing prices, it's the hottest topic in Canada right now, and it's the hottest topic in the United States as well. For a mechanical grade steel tube manufacturer, primarily focused on automotive, it's not a direct connection, but it's certainly something we need to keep an eye on, because the housing price appreciation, or perhaps inflation, has been breakneck, and that's created a lot of unusual behavior, I would suggest. But certainly we're seeing crazy price appreciation or potentially inflation in these things, and that's driving a wealth effect, which could potentially drive demand for automotive. And we certainly are seeing in luxury car sales, we are seeing, again, for a manufacturer like us, there's not a lot of volume in pure luxury vehicles. We prefer the best-selling car in North America as opposed to the fastest car in North America. But certainly we're seeing it across the board, and I'm hearing it through private conversations with friends and family as well. Everyone's feeling a little richer right now. Monthly auto loan payments surged to record highs as borrowing hits biggest one-year jump. So those taking out new loans to buy a vehicle borrowed on average $35,000, an almost $2,000 increase from last year. Automakers no longer have to offer massive incentives. There truly is wild demand for a lot of different vehicles, specifically trucks and SUVs in the North American market. We're seeing steel lead time in weeks being pushed out week after week. We've never been in a situation where you tell a customer and actually mean it, that the price is valid for 24 hours, and they don't confirm this price, then they may potentially be looking at a higher price tomorrow or next week. We are seeing this was in February, end of February came out, but China's economic recovery slows. PMI had dropped, and the data certainly is extremely confusing due to the pandemic last year, a lot of the shutdowns, and so it's skewing all kinds of things.
Dear colleagues from the tube and pipe industry, we all have to acknowledge that Corona has had a significant impact on our industry. Well, the major part of our products really get into the OCTG industry. That's about 51%. And second biggest is automotive, mechanical engineering, construction are the major segments we are serving. And I must say, so I would like to talk a little bit about OCTG, construction and automotive. Well, when Corona started in Asia, mainly in Wuhan, it took control of Europe, United States and many other countries. See that there is a significant correlation between oil price and the number of oil rigs, oil exploration rigs. And this is where most of the tubes of OCTG goods are consumed. You can see that since September 2020, the price has gone up by about 14%. Which is according to FRED, and you can see that this is really a good sign, but and it is also showing that now at this price level of we have a price level of about $60 per barrel. We are exceeding the cost of the different countries, and so it is restarting again the production of the production of oil and gas, and which is causing also more demand for tubes and pipes for the OCTG market. If we see the construction construction industry for other purposes, you can see that this market has gone down by 5% only since March 2020, and it is now recovering again. And this is still quite interesting market for our industry, and we can see that most of the producers for tube and pipe structures, they are full, and they have their order books are quite filled up. We can say that the recovery of automotive industry is regionally very differentiated. We have very good sales in China and the United States, and we are already exceeding pre-corona values. And so in other regions, such as Europe, Russia, and South America, we are still far under the corona values before the corona pandemic started. So in essence, we can say that our industry is right now having some opportunities, but it has also very difficult times. And we have to see how we can strengthen and how we can get our industry to be strong to survive. And
my name is Mihir, and I have spent 12 years with Wellspun as a director of supply chain and working in Little Rock, Arkansas. We started in textile, and from there to steel and then pipe business. Global capacity, we have 2.6 million ton of line pipe that we produce, and we have plants in India, Saudi, and Middle East over there, and US. So I think we all know about the steel pricing, but just as an overview, I'm just sharing the slide that I think Nicholas mentioned about, or some other panelists mentioned about the SMU seminar that someone attended last couple of weeks back. So the hot roll prices are still trending. If you look at it, this is the all-time high that at least we have been seeing in recent time. Of course, that's the COVID time. We had seen the downturn in the prices of the hot rolled. But is it the all-time high now? Both pricing and the lead time are at the best level for the steel industry overall. So the picture that I had, I put that last year in my presentation, which I liked again, and because we still believe, at least I still believe that we are still into this situation. It's a rabbit hole. It's a trap. We don't know exactly what will happen, but at least
certain automakers have kind of led the pack, and even certain platforms, which would be managed by specific engineers, led the pack. Certain vehicles, they really want to have the highest safety record. So it's kind of, you're not seeing it potentially across the board. You might close your eyes and think, okay, the Corvette probably has the lightest seat frames, or a car that's built for performance is going to use the most advanced high strength steel. But what you're finding is OEMs and their engineering groups are picking vehicles that they want to have the highest level safety rating with the best possible fuel economy.
So again, if you look at the oil pricing with $60, $61, $62, we started seeing the movement of the requirement on OCTG side of it, casing particularly, not so much on the tubing, but casing. So. But again, the demand is not to that level yet. But again, I still strongly believe that inventories are eventually be leveled out with the demand level, and supply and demand ratio will be there to trigger to put in more inventory out. But it is at least 1 quarter out.
Yeah, I think it's quite clear that presently the inventories are quite filled up, and we can see that this has an impact because still the drilling activities are on a relatively low level.